Hey everybody, it's Pete. Good morning. Welcome to a new episode of today's Best Stock Picks. Thank you so much for joining me here today. I really appreciate it. Today we're going to talk about all of the reasons I'm looking to buy CROX stock right now. There's a bunch of them. Earnings were amazing last week. It had a bullish gap up. It's kind of just hovering near that new high that it hit, and we're gonna give the reasons to buy CROX stock as well as the price point that I'm going to be looking to buy CROX stock. We have a lot of earnings coming out again, especially after hours. Pfizer pre-market today is scheduled, but we're going to spend a little bit of time today on two different things. One of them is a request that we got in our comments yesterday, which is why it's very important. If you have something you'd like to ask, definitely leave it in the comment. We read everything, reply to everybody, and it's going to be about specifically building a list of stocks to trade, but more importantly, how to understand something that we've been talking about quite a bit, which is very relevant in this market right now, which is when the market kind of goes sideways, how do you find money? How do you get in there and find stocks to trade? How do you find conviction in your trading ideas when the market's not exactly screaming to one side and just lifting everything up all at the same time? So stick around, we'll be right back. Okay, so first thing we're going to do is we're going to dive right into CROX. We're going to take a look at the futures very quickly, and then we're going to jump into CROX. So let's actually head on over to the charts. We're going to actually start out with the SPY to give everybody some context, and we're going to zoom out a little bit here. So you can see here now in the SPY, and if you watched yesterday's video, the candlestick pattern that I described yesterday, known as a melted candle or indecision, you might know it as a doji type candlestick, but essentially the SPY now 1, 2, 3, 4, 5, basically 6 days of indecision, which is what's making a lot of longer term swing trading type of an environment to be a little bit more stock specific than leaning on the big picture in the market. We're waiting for the market to pick a direction. Now, if you remember what I said yesterday, and I just want to really go over this trading lesson one more time because it's kind of important. There's natural ebbs and flows to the market where you push up and you pull back, you push up and you pull back, and that's kind of expected, and that's actually healthy. That's what a healthy market looks like, right? Now we're getting where we're pushing up and going sideways, and that's, believe it or not, unless you see massive volume during a pause, really like a really obvious spike in volume, the anticipation of when that goes up and goes sideways, that means that they're holding the bid, and that means that they're still buying underneath there. So what's interesting in the boot camp yesterday, we had a lot of questions about, does this mean we're selling off? Does this mean we're rolling over because we weren't going straight up? And it really means that we're lacking selling. It doesn't mean that we're going down. It just means that the buyers are still holding that bid, and the anticipated next move would be to the upside. And really, what's changed to feel like we're going to start going down? We have to guard for the downside, but not be afraid of it. There's a big difference between the two, and that's what makes somebody a good trader. So this chart of the SPY, we're actually going to take a look at the price action and the volume, and we put those pieces together to start formulating what we can anticipate happening next, and that's how good traders create their trading game plan. Some trades are for today, and then some trades are for in the future, because if this happens, then you plan to do this. And that's the difference between entering today and setting alerts at specific prices. Very, very big difference. And a lot of traders miss good entries. We actually had a question about that last night in our weekly coaching call, which is how do I make sure that I don't miss entries? And it really comes down to understanding how to setting up your watch list. And if you're not looking to get into that stock right now, like we're going to take a look at CROX, then you need to set an alert prior to that. And then if and when it gives you an entry signal. So there's an alert or a price you want to get involved, and then there's the actual price. So you set the alert. If it's going up, you set the alert prior to that. It tells you, hey, I'm almost there. And then you actually look for your entry signal. And yesterday we had McDonald's, very similar setup. McDonald's was one of our top trades ideas yesterday. But the way the market's been trading, especially if you've been day trading, you're popping up to the upside, getting crushed, and then slowly rallying back up. So we actually set our buy stop after the market opened yesterday, which was the smarter thing to do. Kind of crawled back up and then got spanked, and we just didn't do anything. So you got to be smart about when you place your orders too. All right, so we're going to head and write it back over to the charts. So that's what we're looking at in the SPY here. So the next thing would be to do is to take a look at the volume. And you can see we actually did during 2 of these days. Now, again, one of them was an FOMC day, have a little bit higher volume. So we want that trend to go down like over here in order for us to anticipate another move higher. We're kind of just drifting right now. There's really no bias. I think that's a big thing too, is just because you're not going up doesn't mean you're going down. There's a big difference between the two. We're still sitting in this window, so the SPY has to kind of get out of this. It seems to be kind of glued, as Chris in our community says. It seems like it's kind of glued to 418 right now. So we're going to jump right over to the chart of Crocs and talk about the entries here and what we're going to be watching. This is after earnings, and you can see now what it's doing. It's actually what we call holding the bid. But the reasons to be looking to buy stocks, CROX stocks, can't even say it at this point, is the outlook. This is really what you want to look at. Whether you talk about outlook, whether you call it guidance, that is easily the biggest thing that I watch. Because remember, you're buying tomorrow's company. You're not buying the company that happened back then. You can anticipate based on the trailing numbers, but today you are buying what you expect to have happen, and that's the outlook. That's the guidance. And you want to see some really impressive numbers like this of quarter over quarter, year over year. Anything over 25% is actually considered pretty good. You start getting into 40 and 50%. Those are some pretty big numbers. I'm going to actually scroll down just a little bit over here. These are, again, the numbers that I'm looking for, the reasons I'm looking to be a buyer of CROX stock, and then what price. It's actually kind of fun to say. Earnings per share expected at 89 cents, came in at $1.49. Revenue 460 compared to what was expected at 415. And the big thing is net income also growing. That's a big deal. So those are the reasons I'm looking to buy CROX stock. Now the question is where? What price am I looking? Now you can clearly see the stock gapped up. Let me actually zoom the chart out so you can see it. Stock actually gapped up, and going into yesterday would have been the ideal entry coming out of this two-day pause, but it didn't trigger. And that's a big thing. You need for your entry signal to actually happen before you get in. You don't want to jump. You want to be patient, and patient traders get the right price. Patient traders get the optimal entry. So what I'm looking for right now is I'm looking for it to be over 102, and that's going to validate this and new buyers stepping up. Now, the fact that we had this bullish gap and have not pulled back, that's pretty good. If it trades higher, over 102 is the area I'm looking for, then I will look to get back and will look to get involved, which kind of brings me to what I want to talk about in the setting up of a watch list. Now, this is really important, and I think there's two types of watch lists. I'm going to do a much more detailed video on this, but I want to give you a heads up on how to do it right now. There's your day trading watch list and your swing trading watch list. If you don't know, if you haven't been a professional trader, which, by the way, you definitely want to learn about the difference between how professional traders think and act, and how let's just say retail traders who have another full-time job, who don't have that mentality yet to understand trading's about risk reward, trading's about probability, trading's about expectation, trading's about having an edge. Retail traders tend to focus on was it right or wrong, and that's really the wrong way to think about it. So if you want to get into this a lot deeper, just click the link below and learn more about the boot camp. It's a 30-day immersive program that we have. You'll absolutely love it. So anyway, there's your day trading watch list, which is the list of stocks you pretty much trade every day. And then there's your swing trade watch list, where sectors move in and out of favor. So the day trading watch list is technically stuff that is market leaders that have good volume and liquidity every day. So you can keep going back to them day after day after day, and they don't wear out. The swing trading type stocks, we're really looking for sectors in play, industry groups in play. So what we're going to talk about right now is we're going to use Boeing as an example to build a list. And I'll just show you one sector into an industry, into the stocks, and give you an idea of how to create your own list. Okay. So we're going to head right over into Finviz, our favorite software, right? So finviz.com, and we typed in Boeing. So everybody knows about the charts and all the numbers and everything like that. But what we're going to focus on is this part right over here. So first we're going to take a look. Boeing is in industrial. So now what's kind of cool here is that whether you're looking to trade this for a day or trade it for a week, what I'm about to show you applies. But what is important is what time frame you're paying attention to the performance. So if you're day trading, you're going to be looking over maybe the last day and the last week for what I'm about to show you. If you're swing trading, maybe you're going to be looking at the last week and the last month. So the time and the time frame that you're looking for the performance is what's going to matter. And I'm going to show you how to use that right now. Okay. So we clicked on Boeing, and first we're going to go into the larger industry. And you can see in the sector, industrials is 595 stocks meet that criteria. And there's a bunch of different industries, right? So we're actually going to work our way down out of this. And so first we're going to start on the industry level. So you got 2 million is my average volume that I like, and I want some volatility. So we have liquidity and volatility. So you can see that was broken all the way down to 25 stocks. So this is the broader sector list of stocks that you would create to be watching Boeing. So depending on whether you're a day trader or a swing trader, you'd be looking at the week and the day if you were a day trader. If you're a swing trader, you'd be looking at the week and the month. So we're going to be sorting this by performance. And if you're looking at Boeing, you'd be looking at the top performers to be buying. So you'd have one big list of industrial. So let's say you're an industrial trader and that's what you trade. So if we go back into Boeing, and we'll sort this by ticker again, so we could pull that back up on the top, and we could break that down even further. So we just looked at the larger industry over time, right? Now we're going to go into aerospace, which breaks it down a little bit deeper. So that's only 50 stocks before I even work my way down. So again, I want liquidity, which for me is an average of 2 million shares per day. And then I want average true range, which is $1.50. So again, liquidity and opportunity. So if I'm day trading Boeing and I'm on a much shorter time frame, it would be these stocks that would be in my list. So I'd have Boeing, RTX, Space, and SPR. So how do you use this information? That's the big thing, right? So now you're looking at performance. And you're like, okay, I'm day trading Boeing today. So you want to know what stocks are trading with Boeing. So in this industrial sector, let me actually go back to overview. Industrials and aerospace defense. Out of all of these stocks during the day, RTX and Boeing were the only two that were positive. So you start to drill down a little bit deeper into the charts and you pay attention to where the relative strength is. And you can see clearly RTX would be the one that you'd be trading. So if you're trading Boeing, RTX would be, quote unquote, the stock you'd be watching for a bounce. If you're trading all of these, and Boeing happens to be one of them, the market leader here would end up being RTX. Let's actually jump over into a different sector. Let's take a look at Hess. And this is a good example because the energy sector is strong. So we're going to do the same thing. We're going to break it down by energy. And you can see 286 stocks in the broad energy sector. And you can see there's different industry groups within that. So we're going to click all. We're going to go for our liquidity. And then we're going to go for volatility, which is over $1.50. And you can see that brought it all the way down to 11 stocks. So again, from a performance perspective, you're looking over the day and the week if you're a day trader. And if you're a swing trader, you're looking for the week and for the month. So what I want to get across here is what we just did is not that complicated, but you need to do this after hours if possible so that you can really dig in and think about which stocks you want to trade. Then you have to watch them for a day, maybe a week, see how they trade. I can't stress enough, if you're trading stocks, and especially if you aspire to trade stocks for a living, this is where the money's made. The money is made before the market even opens. The money is made when you prep yourself to have the right stocks on your screen. You become a specialist in those stocks. That list of stocks is your focus. You'll never miss an entry. You'll know when the stock's performing well. You know when something's wrong. You'll know the volume, what's a good volume day, when you should size up a little bit, when you're getting follow through. But here's really the key, though, that a lot of people focus on incorrectly. It's like you'll be looking at it and you're like, Pete, well, we just looked at Boeing and two of them were positive. One of them was neutral. The other two were negative. How does that help me? Well, number one, it tells you the industry group that you're looking at is not particularly strong right now, which means that it's probably a good idea to have non-correlated industry groups that you're watching, because maybe one is on fire and the other one is doing nothing. So you pay attention to the one that's on fire. But here's the second part. What does it mean that it's on fire? So let's say you're watching electric vehicle stocks or cannabis stocks or solar stocks, whatever it happens to be, which, by the way, all three of those industry groups are not performing well at all right now. But what if they are? What if you look over at your screen and you have 7 stocks in the electric vehicle area? BLNK, Tesla, NIO, XPEV, a whole big list, right? And you look over and all of a sudden you run your performance scan. And you're like, wow, all of them are green today. And then you look over to your week and you're like, wow, all of them are green over the last 5 days. It's then that you should be excited. You shouldn't be disappointed that none of them are obvious, because that's a sign to stay away. It's the other side of that. So first you learn to do nothing when it's not obvious. And then the second part is you need to learn to make more when it is obvious. When order flow is stepping up and buying's coming in, that's when you should be sitting up in your seat and saying, okay, something's going on here. Now I just need to piggyback on what they're doing until I see a reason not to. And that's where you keep working your charts, as we talk about every day. So thank you so much for joining me today. If you have questions about this, like I said, that topic was just brought up by you, members of the community. So leave comments below. If this is your first time to the channel, or if you're a visitor and you haven't done it yet, please do me a favor, click down and subscribe. It would mean the world to me. Give us a thumbs up if you like this kind of content. And if you want to learn how to trade with me, my boot camp is only 30 days. That's not a subscription. It's basically a 30-day interactive seminar with me, with over 140 hours worth of live interaction with me every day. We do this in a lot of detail. So have an awesome day, everybody. Click the link below. I'd love to see you on the other side. Take care now.